copy streaming link. I can do that, right?
Okay, we are live. Just give me a second here. Just give me a second. Okay, I sent it over to you.
I think I have the link here. Did you DM it to me or?
Via the chat. We're live already,
Oh.
Joe. So via the
All right,
chat,
we're live. All right, cool. Let me
I just give the people some time to come in,
okay.
but you can tweet it out.
Let me tweet it out while people are hopping in. Perfect. There we go. Okay.
All right.
Let me just tweet it out.
All right, we are watching, so people are watching. I have some people here also in the room. Let me admit them all. Okay. What I got up here, Joe, is the futures, in case you were watching.
Okay. How many cash tags should I put up?
People are probably busy watching football. Football's back on, right?
Yeah, football's on. Lakers start soon.
Oh.
Surprised.
Dow futures up 150 points as investors monitor Trump response to coronavirus treatment. And I saw that Regeneron was taken higher Friday afternoon.
Yeah, after the close on that news, yeah.
I wonder if that's a play for Trump, whether he gets well or not.
Yeah, he was also taking Gilead's drug too.
Uh-huh.
He took that the next day.
Oh, so he was taking the whole cocktail.
He's taken everything. I'm trying to get into the center of this stupid picture. Here we go. All right. I just tweeted out the link, so hopefully we get some.
Yeah, let's get started. You got 20 people.
All right, we can get started.
Yeah. So we saw the futures, right? Let me go up one more time. What do we have here? Let's see. Futures, S&P 500. Futures up 17 points. Let me look at the hourly chart. 5-minute chart. So, nice bounce. I guess pretty much back to Friday's close, no?
Yes, I believe so. Close to that. Yeah, that's right.
Okay. So you want to punch up the S&P 500, start with the market, what you're seeing with the composite, the Nasdaq, the S&P 500 distribution.
John, should I share my screen then? Bring that over?
Please go ahead. Yes.
Okay.
And you guys over at YouTube and also in the Zoom meeting, if you have any questions, just feel free to not jot them down, just put them out there and we will try to answer them.
Yeah, send them over via the chat or via YouTube Live, everybody. We're just giving people a couple minutes to hop on, but we'll get started here. I'm starting with a daily chart of the Nasdaq. Let's go to the S&P because a lot of people like S&P stuff. To me, I'm not big on S&P levels. I'm not Fibonacci or anything like that. I'm just sort of looking for rough levels. I know this 3230 is where we started the year off at on January 1, and where it kind of lined up when you draw a line all the way across with that 3230 level. It's also where we met resistance on June 8th before we came in a little bit. And it's also where we broke out of before we had that really, really nice run in August. And it's also when we came down where we found support around that, call it 3,200 to 3,230. So that seems to be an important level for the S&P, at least from what I'm watching. And I think me personally, when I just look at this overall trend, I think it's normal when you have an uptrend to come down and visit the 50-day once in a while. So a lot of people are freaking out about this pullback, but when you study history, 8 to 12% pullbacks along the way up. Not every correction has to be a bear market. Not every correction has to be 50% and has to be a disaster. Once in a while, you're going to have normal 8 to 12% pullbacks. And the pullback that we had seems to coincide with that level. And it's nice to see, number one, a lot of stock stabilizing. Number two, a lot of sentiment got kind of negative around that level. And number three, a lot of setups in the Fed still on the market side. So that's sort of what I'm looking at as far as the markets right here.
What's that year-to-date number again?
3230.
Okay. But we are below the 50-day, no? Oh, it's slightly
below. Yeah. 3230 was break even for the year. And, my feeling is, I don't think I'm not big on, predictions or anything like that. I just think that this was a normal correction. I don't think we shoot back up because there's still some uncertainties and, we could still see some volatility over the next week or two, but I think we'll at least stabilize around this level. So it might be nice to see a little digestion and stabilize around this level. Me personally, I'm not seeing any sustained downside from here. Maybe some volatile days and a little bit of shakeouts. But for me personally, I'm basing this on going through my screens this weekend. There were a lot of strong stocks.
Right. Now, I just went through some charts as well from the Russell 1000, and a lot of stocks have held up extremely well, better than you would expect after a 12%. Was it 12% retracement?
Yeah, 10 on the S&P and maybe I think 12 or 14 on the Nasdaq.
Right. What do you think happens if we break 3230?
On the downside?
Yeah. I mean, we were above it, right?
3229 would be the next level. No, I mean, I could see us stabilizing around there if we did break below that 3,200, 3230, because you got to give things a little bit of room. If we broke down below that, I would definitely, some people have called for maybe a retest of the 200-day, which would be your next level, the black line here on the chart. But it's, to your point, it's not necessarily tons of setups. It's just you go through and you say, wow, when you're screening. And that's why I encourage people to screen. If you can't do it nightly, do it on the weekends when you have some time. And I was just surprised at how many stocks are holding up well. There were definitely some setups. There's some stocks that were much stronger than I expected. When I look at the Nasdaq, one thing that surprised me is, given the news overnight on Thursday, is it was a lighter volume down day than Thursday. So given the news, we were down 250 points, couple percent, which, considering we just had a nice bounce for a few days, it's not unreasonable to pull back and retrace a little bit, but it wasn't down as much as I thought it would be. It wasn't on heavy volume. And a lot of stocks are just sort of hanging in there, but they just might need a little time to base out. And the more you study chart books and the more you study charts, you'll understand what I mean as to what's normal and what just needs time to consolidate a little bit more.
Right. So let's talk about the Nasdaq, and then let's get into some of these stocks.
Okay. Nasdaq, I think that the markets tend to overshoot in both directions. I think that this run we had in August was pretty strong, needless to say. The Nasdaq was up 100 or 200 points every single day. And the one thing is, recency bias can affect us, where we start to forget the market comes down once in a while. We start to forget that we can have corrections and pullbacks because we're just thinking, stocks only go up and it's the easiest thing in the world. And what you have to remind yourself of is that when things get a little bit stretched, I use the rubber band analogy. When stocks in the markets get stretched, a rubber band, you can keep stretching it and you can keep stretching it. Eventually, it's going to snap back. And because we overshot to the upside, we ended up dropping down to the 50-day. Unfortunately, it was very quick. It was the first time the Nasdaq had a 10% correction from an all-time high in 3 days.
Right. Well, let's listen. We are in 2020. We've been breaking records, all sorts of records this year. But on that point, on that rubber band point, right?
Yeah.
That's usually when you lose 2 months worth of gains in a matter of a couple of days. Number one. Number two, that's when the frustration for most traders come in, when they continue to do the same exact thing that was working a month before. They continue doing the same thing, although the market environment changed.
Correct.
Now, since the market environment has changed, it always changes. It goes from an easy money environment to more of a hard money environment. What changes have you done over the last, whatever it is, 2 weeks, just to keep pace with the change in the environment?
Well, when things get a little bit stretched, I like to look at seasonality. And I told my educational members that towards the end of the quarter, you get those 60-40 portfolio rebalancing, where that might be 70-30, and money managers who are passive that do that quarterly, they might have to take it down a little bit. You get mutual fund window dressing. There are Jewish holidays. You are getting, just sort of earnings are out of the way. I call it no man's land, where there's not much news besides politics and so forth. So when you see things get a little bit stretched, this is where you need to define yourself. Are you a trader or are you an investor? If you're an investor, you have to accept that there might be some volatility. If you're a trader, to directly answer your question, one way to do that is to reduce your exposure a little bit. And when you see things stretching a little bit and you say, hey, maybe we're due for a pullback here, to do one of three things: raise a little cash, reduce your position size, and also minimize your trading, so that when you do get that chop volatility, you don't get chopped to pieces.
Well, the problem is, Joe, that most people start as a trader, but when the stock goes down, they become investors. What do you do then?
And then join conference calls and go to shareholder meetings. That's what I would do. I mean, you joke, but we're all guilty of it. And the problem is, you're right. You're a trader. And then when you don't obey your stop losses and you don't obey your sell discipline, which you have to have, you say, okay, well, I didn't stop myself out. Now I'm buried in this thing, and you just won't take the loss. And these are things you have to make improvements on. I mean, look, we've been doing this, a combined 40 years between the two of us. We still make mistakes and make errors, and you just have to constantly improve on them so that you minimize those mistakes in the future. So if you didn't reduce exposure and you got hit, next time you say, okay, I go on a good run and the market stretch, you have to have that discipline you really have to be honest with yourself and say, okay, well, next time maybe I'll reduce a little bit of exposure, or when I feel the market's choppy, I might just, instead of buying 100 shares, I'll buy 50 shares to deal with a little bit of volatility.
Right. Listen, what I do typically, anytime, so right before I do a trade, I always predefine my stop, right?
Yeah.
And my stop is pretty short term, might be 1 to 10 days. But anytime that I get a couple of stop outs intraday, I immediately reduce my size, because that rarely happens. So if I get 2 or 3 intraday stop outs, which happened at the beginning of last month, September 8th or 9th,
okay,
immediately I reduce size until things start to get better. But you mentioned also seasonality. We're going into October, which is normally known as a bear month, but October also produces a lot of bottoms.
Yeah.
And usually you get some, I think the second week is pretty much one of the worst weeks of October, but the third and fourth week tend to be very positive for the market.
Yeah. Yeah. And that's where seasonality can become something where it's a factor. seasonality could be something to pay attention to, but this is where you really have to define yourself if you're a trader or you're an investor. For longer term investors, then it doesn't really matter if we have a little bit of a drop or markets and seasonality, because most people do have a longer term time frame. But even if you have a longer term time frame, you still have to get strong entry points to give you a cushion to sit through the volatility.
What does that mean to you, a strong entry point?
To me, it's buying off of a consolidation. When a stock has a proper base or consolidation, and buying off of a consolidation area where historically or traditionally you're increasing your probabilities of a stock emerging from a proper base or consolidation.
So you're buying before it actually emerges from the base, before it breaks out?
Around that area. I give a little bit of forgiveness in a strong market. I know you're not supposed to anticipate, but I don't mind buying somewhere around a handle or consolidation area, because in good markets, I'll say two things. In good markets, when you notice they're going and they're breaking out and they're breaking out, you can cheat a little bit because that's telling you the market's strong. So I don't mind buying it in that consolidation, and you're very good at buying them right as they emerge out. So you're getting a very strong specific entry point. The second thing I'll say, though, is in a bad market, I won't even touch it. Even if it does break out, a lot of breakouts fail in a bear or corrective market. So I won't even cheat. And even if they break out, I know that 4 out of 5 will fail. So I don't even touch it because I just know it's probably going to fail.
All right. So let me ask you this. So what are we in now? A good market or a bad market based on the way you're seeing things?
Good question. From 1 to 10, I'd say this market's a 6 or a 7, 10 being very strong. I think I'm basing that on the price action of stocks. I think the Fed is very, very strong. And if we get a little bit more institutional accumulation, and we started to firm up a little bit and get, above the 50 days and have a couple of days where the institutions are coming back into the markets, then I would move it up to an 8 or a 9. But I think the market's pretty strong. I really do.
But it sounds to me that 6 or 7 does not take to account the elections or seasonality. You're talking about just strictly based on price action.
Correct.
How quickly can that 6 and 7 change to the better or to the worse for
quickly.
you?
It could change very quickly. That's why I'm on top of the markets every day. I try to be patient. I try not to react to an intraday sell program and freak out. And I try to encourage people to be calm. But if we had like 2 nasty distribution days on Monday, Tuesday, then yeah, I would probably drop 2 or 3 or 4, and I'd probably get stopped out of some stuff, and the price action would lead me to that, and I'd have to reduce exposure. So it can happen quickly. But that's why I personally, when we're looking at the Nasdaq here, I personally don't think we, shoot straight up to new highs. I just think we still need to digest. I think the market needed to shake out some of the excess bullishness from the month of August when we went straight up. And I just think we need to digest, and digest means sideways. So I use the analogy after a big Thanksgiving meal. What do you want to do? You want to lay on the couch. So we just had a big run and consolidated. We popped a little bit last week, maybe a little sideways action until we get a little bit of clarity on the president's situation and so forth. But at the end of the day, I'm really trying to practice what I preach, which is shutting off the news and paying more attention to the price action.
Would you consider going long Gilead or Regeneron based on, Trump having COVID and either coming out of it or not coming out of it?
I mean, I don't know. It's one of those things where, I mean, they're great companies. I would be wanting to buy them because they're great companies. Regeneron, from what I've heard, has one of the leading, I mean, they're still, I think, in phase 2, I forget exactly, but one of the leading antiviral cocktails. It wasn't a large enough sample size from what I understand from their latest data. Besides that, they have plenty of other drugs. I mean, they're doing, what is that, 8 billion in revenue. So, and they're earning over, $30, $35 over the next couple of years. So besides the antiviral cocktail, which would be huge, I mean, they also have they have other business, other drugs in their pipeline. Same with Gilead. But it could give them a boost, but I don't know. It's not really what I'd play for. You know, it's not really what I would do.
I want you to look at a couple of stocks that might be up your alley that I believe have been going sideways for about a month to 3 months, like OKTA. If you
Okay.
can punch that one up.
Yeah.
Tell us what you're seeing. What are you thinking?
I love why I screen is to look for themes, and I love software because over the last 5 or 6 months, the one sector that has consistently shown up. I've seen medical products, I've seen biotech, I've seen semis, I've seen some retail, but the one sector that consistently shows up for the past 3 to 6 months on my screens is enterprise software, cloud computing related, and I specifically like internet security related stocks because as companies, more people working from home, companies need to beef up their security in their cloud. I like the ones that have to do with internet security and cybersecurity. Okta is in that group. Keep in mind, after stocks, it broke out of the space around 140. After stocks make runs, they need to digest their gains. That's what building a base is. And what I like here is it's sort of going sideways and building a nice base here. You could, technically maybe call this a double bottom. I like to connect any lines I want to form a chart pattern because why not? It's Twitter. That's what we do. But either way, it's still a consolidation and they have strong earnings and sales growth. I try to combine all the factors into my all the factors to help my probability: strong earnings and sales growth, strong chart pattern. If there's unusual option activity, that helps. If there's some sharp funds and sharp money managers that own it, doesn't mean it's always going to work, but kind of like what you say, just kind of stack the deck to try to, help your probabilities out.
Okay, so this one is just going sideways, one to watch for a possible breakout.
Yes.
All right, what about Avalar, AVLR?
AVLR.
All of these have just been going sideways for the most part.
Same thing. At least you have a range here. You have a pretty, depending on your time frame. I mean, that might be too loose of a stop for you and I, but one thing I really like what you say is for people who don't have, and you can maybe stress on this point, who don't have time to watch the markets so closely, is maybe smaller positions and give them room. If you want to elaborate, I know that's something you've talked about.
Well, the studies have shown that the best stops are the 20% stops, where you buy a stock and you start with a 20% stop loss. That's going to give the stock enough room to wiggle, and it'll keep you in the stock for a while, and you will allow the stock, for it to work out. Because again, one of the biggest issues that people have is when it comes to trading is taking quick losses. If you have an issue with that, then go into a stock like what Joe is saying. It's got great numbers, a great story, perhaps, in play, and just go in with a wide stop. And that's always my suggestion. Go in with a 20% stop. Figure out how much you want to risk. If you want to risk $5,000, then figure out 5,000 into that 20%. That gives you the amount of shares that you can buy, and that'll give you enough time for the stock to play out.
Yeah. And some people might say 20 is too big of a stop, but what I like about what you say is maybe you take a smaller position and give it room, so that if you took too big of a position and then it drops 5%, you stop yourself out, you're not giving it enough room, especially if you don't have the time to watch the markets all day or there's some volatility. So a 20% stop is not that big of a stop if you have a smaller position.
Right. Not only that, nowadays you can do a trailing stop where the system will automatically trail the stock higher. So every time the stock hits a new high from when you bought it, the stop will go up with the stock. So immediately you're reducing the risk. If the stock just ticks higher by $1, that 20% will increase along with the stock price. And you can always, just maybe do 100 shares with a 20% stop, maybe do 100 with a 10% stop.
Yeah.
The key is to find solutions. So Avalar is the same thing. What about LVGO?
LVGO is trading on Teladoc because Teladoc bought out a Livongo. It was I believe, a cash and stock deal. So they both look great, and you're going to have to, so you're going to have to maybe watch Teladoc. because keep in mind the stock went from 80 and it tripled from 80 to whatever 240, roughly 250, and it's just consolidating here in this range here. So it's nice to see that. Maybe over the summer or after stocks make good moves, they digest, they go sideways, and it's building a nice base, and that could offer a decent entry point off of this consolidation.
All right. What is for you? What is a normal time for digestion? Is it 3 months, 6 months? Is it 2 months?
Uh, Great question. It depends on the type of market correction we have. Like a normal cup with handle can be, 7 weeks up to even like, whatever, call it 2 to 6 months for a normal cup and handle to form. But then it depends on where we are in the stage of the stock, because then after it breaks out, you can see a 4 to 7 week flat base after a stock breaks out. So it really depends where you are in the overall chart pattern of the stock. I'm trying to think of an example. Like if I pull up MasterCard is just building a really, that's sort of a big, I don't know, it started in February and built a big base here. Where I'm sorry, I'm screwing up the lines, but that's a good February to August. What is that, 6-7 month base that it's built? And then it's sort of building a handle to the overall structure. So these are the types of things that's put in a bigger correction. And then let's say, just hypothetically, if it broke out, then maybe look for a second stage flat base. But it really depends if it's a first stage base or second or later.
Talk to me about EXPI.
EXPI, it's a way to play housing. Housing is very, very strong. I talked about when I screen, I'm finding tons of home builders. I'm finding, what's the word I'm looking? Construction related stocks, insulation, wood decking, flooring, anything to do with new home sales, existing home sales. The numbers are so strong. So I'm finding a lot of home builders and construction related stocks, as well as the sites such as Zillow, Redfin, EXPI, a couple others that are related to, the transactions to do with with selling of homes. So the entire sector is very strong. If you don't want, sorry, I got the wrong symbol. XHB. Sorry, I typed in the wrong symbol. If you don't want single stock risk, there are two great ETFs, XHB and ITB. And you can be a little bit resourceful. Google the components of these. Some might own home builders, Home Depot, Lowe's, the places people go to help with home improvements. These are the types of things that I think the sector is very strong. And if you don't want specific stock risk, you can get broad exposure to this. But yes, overall, a lot of things housing related are very strong.
Is XP the Zillow of China or no?
Is which one?
XP, EXPI.
No, there's another one that's a Zillow of China, and I don't remember the symbol. I think it starts with a B.
BEKE.
Yes, thank you. That's the one I've heard is the Zillow of China. It recently IPO'd. I've seen it. I just don't know enough about it. And it hasn't really. I like to wait for an IPO base rather than jumping into these IPOs right away. So I haven't really looked at it because I'm waiting for but this is supposedly the Zillow of China.
All right, we got some questions here. GNRC, Steady Eddie. Yeah, Steady Eddie.
You want to take over the screens and take a look at some, or I'm happy to do it myself. Generac, yeah. I mean, this is a nice, sort of cup with handle that it built down here, and then it broke out nicely, and now it's just putting in a nice consolidation, closed at an all-time high on Friday, so it's very strong. Look at the weekly chart; it's been a big winner. They've gone from $2-3 to expected to do over $6.50 in earnings, and it's a strong chart. It's a strong chart.
What are some of the stocks you're looking at right now?
A lot of software. I talked about Datadog. It already broke out, but I talked about it off of this consolidation here. Software is looking pretty decent. I'm trying to see what else is on my list. Chips, MRVL looks decent.
Mm-hmm.
That's sort of got, like we talked about buying off of a consolidation. That looks decent here. They do have an analyst meeting this week, so that's something, they could maybe give some guidance or something like that. But there's a lot of software that's looking decent. ESTC. I like to look at weekly charts. And they got, they just broke out of a big IPO base, and then it's building a sort of and again, a 6-7 week base above that, or if you want to call it that, some sort of consolidation here. So there's a lot of software related on my screens.
You know what looks similar to that? GH.
Yeah, GH, a lot of medical products, medical related. GH on the weekly chart. I remember trading this off of the IPO and I did well. And then it built this big base on the weekly chart. What was the company? Illumina bought a competitors of theirs for like 6 or 7 billion. What they do in one of their main products is liquid biopsy, cancer detection from a blood sample versus a biopsy. So they can detect cancer from a blood sample, which is obviously less invasive than a biopsy. And, medical products and what they do, I mean, these types of innovation is amazing. It takes a little time for it to get implemented and for insurance companies to approve a lot of these procedures. But yeah, this just broke out of a nice space at 100. And yeah, the sector, medical products, medical supplies are very strong.
Twilio broke out on Friday on a raised guidance. So
Yeah, Twilio had an analyst meeting Thursday, and after the close, they upped their guidance. This is sort of, again, I mean, a lot of these software names sort of a double bottom, and I like this sort of, broke out nicely. A lot of these software names just had huge runs from May till, August, and then just consolidated, and they're starting to come around again. I know a lot of people love Fastly. This is another one. That's what I mean. From May till August, big runs, and they're starting to consolidate again. Some are ready, some are setting up, some are building bases. But this is what I really want to stress. It's not about the individual stocks. I want to stress that when I'm finding these types of things, and like you said, Frank, you can elaborate on this too. You're finding a lot of setups, kind of, or at least stocks looking strong. That kind of makes me feel a little bit more constructive on the markets when I'm seeing that.
right now, and then once they set up, they just have to work out.
Yeah, of course they have to work out. But the reason I'm a big fan of, if you guys get one, guys and gals out there get one thing from this, is I talked to so many people that unfortunately, this is a daily chart of the Nasdaq. We had these follow through days. It was April 6th on the Nasdaq and April 2nd on the S&P 500, indicating a potential bottom. We got back above the 50-day, and we had a nice sort of smooth, sweet spot of a trend here, and basically late April into May, June. It doesn't mean you have to get the dead lows, doesn't mean you have to get out at the dead highs, but you have a nice sweet spot of an uptrend where the market's strong. The number of people I've talked to that missed this and that sat into cash, I'm not making fun of it. I'm just stressing the point. When you ask them why, they say because the news was miserable right here. It was the end of the world. We were all going to die of the coronavirus. We're all going to be stuck at home. The market's going to crash. The market already did crash. It went down 32% and 42% on the Russell in a month. And my point is, what hurt a lot of people was paying attention to the news instead of paying attention to the price action, because we had follow through days, tons of stocks setting up, and the Fed came to help the market with an unprecedented amount of QE and keeping interest rates low. And in case we have a decent run in the fourth quarter with stocks setting up, in case, I'm not saying it's going to happen, just I would hate for people to potentially miss out on something when they're too bogged down with how miserable the news is. And I'm just really, I can't stress this enough. Turn off the news. If it affects you, shut it off. If social media, there's a lot of toxic stuff with politics, shut it off and pay more attention to the price action, because that's what matters more than the news.
All right. So besides turning off the TV,
thanks for letting me rant. I'm done.
All right. So besides turning off the TV, I have 100,000, Joe, and the market is going up a lot. What should I do now? Should I go all in? Should I step in slowly but surely?
They should hire Frank Zorrilla to manage their money. That's what they should
That's a
do.
good idea.
That's my answer.
But what's your suggestion?
You got 100,000 and you want to get into the markets. I always say start slowly. You don't have to go all in. Start slowly with, it also depends. It's such a tough question to answer. You don't know the person's time frame, their age, their risk tolerance, if they buy ETFs, if they buy individual stocks.
They want to buy something that's going to go up immediately and never have a downtick.
That's great. I want to lose 40 pounds by Tuesday too. So, yeah, you know what I found with the problem, and if you can elaborate on this, is either people have too many positions or they have like too concentrated of like one or two stocks.
Right.
And you got to just ease into things and just slowly, if you have a lot of cash, slowly get into stuff, preferably stuff that's looking good and coming out of consolidations. But you can elaborate on that because you have more experience with that stuff than I do, as far as statements and what you've seen, some of the problems people make.
Look, I just think people need clarity. Like you said, are you a trader or an investor? Can you handle trading? If you can't handle trading, then perhaps look at weekly charts, take a longer view at things, diversify. Maybe 10 to 15 stocks. Don't go all in into two stocks. That's my suggestion. I mean, people just got to work on their mental game for the most part. What do you think of? Here's a question here. What do you think of TSM?
Taiwan Semi's decent. It's been consolidating, broke out of. So this is exactly what we're talking about. When you asked how long are consolidations, this is a first stage base. We're talking from December, January till July. It's about 6 or 7 months. And then it ran up. And this is a nice 4 to 7 week after things run up, and you can study charts to understand these things. You get usually a 4 to 7, sometimes a second stage 4 to 7 week flat base where it doesn't correct much more than about 10 or 15%. But yes, that looks very good. That looks good here. That looks like a nice consolidation.
And on that first base of what I want people to notice, not only on this stock, but also going forward, that typically when you have a base like the one you just showed, Joe, the first one, that at the very end of the base, when the stock is ready to take off, you see even more tightness. Look at that little handle right there.
Right here.
That's when you see the tightness. That's when usually when you have a base between 50 and 40, at the very end, the buyers are no longer waiting for the stock to get down to 40. They're buying it a little bit more aggressive at the very end. That's what you want to watch to see if a stock is ready to move higher from a base.
Someone's asking, why does Frank like TC 2000, but Joe likes Market Smith? In one sentence, please.
Yeah, I have both.
Frank uses both. For me, it's just habit. That's all. They're great products. I don't push one to the other. It's just habit. I've been using Market Smith since it was Daily Graphs for 20 years. So it's just habit. That's all. Do whatever works for you. Some people like FinViz, whatever works for you.
Besides Tesla, what can you suggest to buy to get a good play in the fantastic auto sales?
I didn't know auto sales were that good.
Have you seen Carvana?
Carvana. I was just punching in Carvana. I mean, what a monster. Everyone's been short. There's been a big short play for a lot of fundamental people, but it's just crushed them. I don't know. I mean, I honestly don't know the answer. I'm going to pass on this one because I haven't really been paying attention to the auto sales numbers. So I'm going to pass on that one.
Cars are selling. Passing is for quarterbacks, Joe. It's either you like it or you don't like it.
Well, the question's besides Tesla, what do you suggest to get a play in auto sales? Why take LeBron James out of the game to put in a scrub? I'm keeping Tesla. I'm not looking for other plays. There's my answer.
There
How
you
do you like
go.
that?
Yeah, I like that one. ZS.
ZS, this goes back to what I was talking about with cloud security. Full disclosure, I do own this one for clients. I like software, specifically cloud security. Crowdstrike I own, ZS, Okta. Those are they're just strong. As I said, as more companies are moving into the cloud, more people working from home, you need to beef up security. And these are great growth stories.
RKT IPO base?
This is Rocket Mortgage. I don't think that's an IPO base. I think this needs time. This is, I mean, it's a way to play housing. This is just too steep. You need more time for an IPO base, in my opinion.
Right. Doesn't mean that it can't go higher. It just means this is not considered an IPO base based on the definition of an IPO base.
Yeah, no, I mean, of course, it doesn't mean it's not going to go higher. I mean, it just, for me, I would wait for a proper base. So when something comes down like this, I'm waiting for a little bit of, symmetry or just some time. I'm not in a rush to get into it. It's kind of a mature company. It's a recent IPO, but it's 46 billion market cap, and they're doing, whatever it is, 8, 9, 10 billion in revenues. It's not exactly it's all the Rocket Mortgage companies and all of their platforms. So it's not exactly it's a mature company anyways. They just IPO'd late.
It says here, can you tell us how to scan to find these stocks?
FrankZorrilla.com.
Yeah, which one's the winners or the losers you want to know? I mean, you use Market Smith, right? And you have certain criterias that you look at: growth, sales, earnings.
Yeah, I mean, you can do that through Market Smith. We both do this. I mean, we do this every night. We're professionals. We do it for a living. That's what we do. And you can enter in criteria. Me personally, I do a lot of criteria based on some of the biggest winners throughout history, but you could just do simple scans. And I recommend people do that and, reach out to Frank or me if you're interested in, I mean, Frank does that and offers a lot of stuff through what he does as well. So
here, SCPL, SciPlay Corporation. First time I seen this stock.
I've seen this. I don't know much about it though. I've seen this on my screens. Designs, develops, publishes digital games for mobile and web platforms, which is obviously a very hot and strong area. So it's in the computer software gaming related. It's a smaller cap name, but it's built this. See, this is to me would be more of an IPO base where it's just more time. So the person who asked about Rocket Mortgage, it's nothing against that, but this to me is more time, more symmetry. That's a nice IPO base. And it's a 2 billion, smaller middle cap company. But yeah, that looks decent. And that's a hot sector. I mean, software and gaming and web applications.
Right. If you go back to the weekly on that chart, you can see how the little contraction here at this very last pullback, that this is a little bit more tighter action.
Right here
on this pullback, the bigger pullback to the, I guess is the 10 week or 40 week, that one right there.
40 week. Yeah. 40 week. Yeah.
You can see how it starts to contract a little bit more based on the way it was trading before, which was a lot looser.
Yeah. This is loose. And then this is, tighter or whatever you want to call it, shallower. Yeah.
Yeah. So that's what you want to see before a stock breaks out of this space. I mean, this is let's look at a decent setup above $17 a share.
Yeah. Yeah. It looks good. Looks good.
INVTA, or is it NVTA?
It's probably NVTA. I don't think there is an INVTA.
Yeah, the name starts with an I, right? Yeah, it does.
Oh, NVTA. Cool. Yeah, I mean, I own this one. This came out of this consolidation here. And I was in off of this consolidation as it was starting to emerge from here. I like this one longer term, but I'm always a fan of getting strong entry points. So I'd wait for a pullback, but it's a great company. If you own it, stick with it. It's a great company.
This is, I think, the second or third largest holding of ARC, I think.
Yeah. So ARC-G, great point. ARC-G is one of ARC Genomic Revolution, Kathy Wood, super sharp investor. They have one of their ETFs. This is their largest holding in the ETFs. And if you ask why, just be resourceful. Google components of ARKG ETF. You'll get a link, and it's a 10 or 11% position of the whole thing. They own Illumina in there. They own a GH, like maybe 40 stocks in there. But their biggest position in this ETF is NVTA. So again, if you don't want, just like I mentioned with housing, if you're not sure which housing stock or which construction play, then buy the ETF. If you're not sure which genomic stock to play and you want to play the whole sector, this is a great way to play the whole sector.
Right. Someone's asking about CRWDs, Crowdstrike.
Yeah, no, I mentioned software. Software did take a hit in September, and I like to use relative strength. A lot of them came back down, but this one held at the green line here is its 21 day. It's consolidating very well. Again, full disclosure, I own it, but yeah, I like it. It's just got explosive growth. You got, close to 90% revenue growth the past 4 quarters, and you have an increase as they are cash flow positive and starting to open up the profit margins with their earnings. The earnings are picking up. It's richly valued, but I believe you get what you pay for. How many companies out there are growing their revenues at 80, 90%? Maybe 5 I can think of. That's about it.
Right. So the person who was asking, how do you find these stocks? There it is. You can go to Marcus Smith and screen for stocks that are, where sales growth is above whatever it is, 25, 30%, 50%, the higher the better, I guess. And then look for proper basis to buy off of.
Or you can just hire Frank and he'll do it for you.
Right. What about APPS? I know you had this one a little while ago.
Yeah, I mean, same thing. I'm just a big fan of entry point. It formed a high tight flag when it went from 6 to 12, 13 right here. That's when I initially entered it. And if you miss it, you can buy it off of the 21 day where it found nice support. I like the company. Again, full disclosure, I currently have a position, but I'm in from a lower level. So that's why, and Frank will stress this a million times more than I will, you got to get a strong entry point. If you're in it from a lower level, it's a great growth story. If you're looking to buy it here, could it go higher? Of course, anything can happen. But again, try to get stronger entry points. And for people who hopped on late, Frank asked, what do you consider a strong entry point? It's off of consolidations.
Right. So you buy them tight and sell them loose.
I love that. I love that.
Right. And if you were to take, let's just call this a random entry, then you're going to need a wider stop. So that way you're not knocked out on a regular simple pullback. So if you don't buy them tight and you use a random entry, you're going to need a wider stop. By wider, I mean 20 to 25%. As the stock tightens up at some point in the future, then you can reduce that stop to something a little bit smaller. What's the big deal, Joe, on pins?
So I have a feeling when the whole TikTok news came out and they were bidding for it, it kind of brought attention to social media because I had no idea, number one, that TikTok had 800 million users, and it's like number 3 or 4 behind Facebook and Twitter and some of the other big ones. But number 2, I had no idea it was worth 50 billion. So I think that the news with TikTok helped sort of bring attention to pins, being Pinterest being another social media platform, that it might be worth more. And it popped nicely. This is exactly what we were just talking about. Built a nice base, popped nicely off of some earnings, and then built a 4 to 7 week flat base, offered you another tight entry point here, and it just keeps doing well. I wouldn't chase it here, but yeah, I think that's it's the TikTok valuation kind of brought attention to pins. So let me ask you something, Frank. I got a couple emails from some people who have said over the past 3 to 6 months, they've just really struggled. And they said they're really having trouble dealing with fear, meaning they see the setups, they see, all this stuff, but they just have trouble because of mainly fear of stepping in and buying something. What would you say, to try to help people out? Because I've noticed that's a common theme with probably 80 or 90% of the questions I get have to do with not the technicals, not the fundamentals, it's the fear. How would you address a question like that?
I would reduce size. I would trade at a level where it's insignificant, where it's irrelevant. It doesn't even matter. Okay.
So even like 5 shares or 10 shares.
5 shares. And you can do that now because there's no commissions.
Yeah.
So years ago, 1990, whatever it is, you couldn't do. I mean, if you did 5 shares, it was going to cost you at least $100. 0 commission. So here's what I want you to do. buy whatever stock you want to buy, predefine the risk, which means that you buy a stock and you know where the stop is beforehand. So if the stock gets to that level, you're out. And then buy something where you're risking $5. So if you buy 5 shares, or if you buy 1 share and the stop is 5 points away, just do that. And do that for the next 20 to 50 trades until you become automatic. And it really doesn't matter whether you're winning or losing. What you want to do is become automatic and put the trades in. We're not going to know beforehand which stocks are going to be the winners or the losers. What you want to do is predefine the risk, trade at a level that makes you feel comfortable. And then as you start feeling comfortable taking the losses and letting things run, then slowly but surely start to increase the size. That's the only way. You're taking baby steps.
It's like building a muscle. You got to work with small weights before you're strong enough to build stronger, heavier weights.
That is it. And now the fact that we can do this so easily, there are no commissions, you can do it. But you got to be consistent.
I genuinely mean this when I want to try to help people to, you know, I'm serious. A lot of questions I get, almost every theme has to do with fear. It's like, you know, we know some great growth stocks and, you know, a lot of people know how to trade or what to look for in a chart, but it's clicking the mouse, you know, it's overcoming that. Oh, what if I lose, you know, and I think Frank is dead right. Start small. So
it's all part of the game. Let's just take a look at a stock. Let's just take a look at OKTA.
Okay.
Right. So now I'm listening to Joe Fahmy, and he mentioned OKTA. It's a great software name. They got great numbers. What's that? EPS plus 43. What is it? 49%?
Yeah, 43,
sales.
40, great sales growth. And they've been cash flow positive for a while, but it's starting to, you know, going from losses, it's starting to really open up the profit margins.
Okay, so now this stock has been trading sideways, call it for
3 months or so. Yeah.
83 bars, 4 months, right? 4 months.
4 months. Yeah.
All right. I just read the book, Darvis. He was dancing around the world. He used to like basis stocks that went sideways. This stock has been trading from roughly 193, and the high here, call it 226. It looks good. I'll buy the stock here at 219. I'll put a stop loss right over here at 185, right?
Okay.
That's roughly, how far is that? That's roughly 16%.
Yeah,
okay?
15, 16%. Okay.
All right, so that's 185 minus 2. Let's call it 220. That's 35 points. I want to risk $500 on this trade. It's not going to make me or break me. I got let's say, for example, I got a $100,000 portfolio. If I lose 500, I'm going to be down to 99,500. Not a big deal. 500 divided by 35 points. I can buy 14 shares.
Bingo. Done.
14 shares. I'm going to put a stop loss. I'm going to put a stop loss at 185. Good till cancel. If the stock breaks this little base up here, Joe, which is what, 228, 231, then I'm going to raise that stop at some point to that little low right over here, which is 199.68.
The low of this range here, maybe, or maybe that
right,
low here.
right around
there.
Yeah, right there.
Right
So
there.
if this stock breaks whatever it is, 230, I'm going to raise my stop. But either way, win, lose, or draw, I already made up my mind that I can risk $500 on the $100,000 portfolio. It's not going to make me, it's not going to break me, so I can buy 14 shares. All right. And I'm going to let this thing run. And as the stock starts to move higher, I'm going to raise my stop slowly but surely. And if you're into that box, the Darvis box, we can assume that if it breaks out, you take the low of the box, which is roughly 193, the top, call it 226, 193 minus 226, it's 33, 33 plus 226. You can make up a target of 260.
There you go. And a couple people have said, Frank, some of the best advice I've heard, great advice. I mean, they love what you're saying, and I agree. And you might say, well, 14 shares doesn't do anything for me. You know what it does? Well, you know, you gotta run a half mile before you can run 5 miles. You know,
Right.
You got to be comfortable with 14 shares before you buy 100 shares. So we're basically stressing, because I'm saying this because I'm telling you, 80 to 90% of the questions I get have to do with fear. You got to learn to overcome those fears. And the way you do it is to start small and get in the habit, so you're building a muscle so that it becomes automatic, so you're not even thinking about fear.
Right, right. If you're looking to play baseball, you're not going to, and you never played baseball before, you're not going to step into the batting cage to the 100-mile-per-hour machine. Start with the 40. Start swinging the bat. Start getting a couple of hits. The same thing with basketball. What do these players do right off the bat? They do what's called form shooting. What is form shooting? They are right underneath the basket, 2 feet away, and they're just shooting the ball, getting the form correct. And then as you warm up,
Take a
then you
step
go back.
Yeah.
Even Ray Allen, one of the best shooters in the NBA, he starts very close and then he comes back. Then he goes forward, then goes back, then forward and back until he finally gets to the 3-point line. So you want to start small. You want to get comfortable. This is a marathon, not a sprint.
Well, that's a great point, because we live in such an impatient world where when you had that question, the guy's got 100,000, what do I do? He wants to turn it into 200,000 by Tuesday. Well, you know, wake up. That's not going to happen. You're in this for longevity. If you can compound as an individual trader your account 15 to 20% a year, which if you put in the work and you have some discipline, I actually do think it's possible. Over a 7-10 year period, you have no idea how much that's going to compound. So,
right. And not only that, let's go back to that OKTA, right?
yeah,
You
we're on
only
now,
bought
yeah.
14 shares. You're risking $500. Then what you want to do is you want to go out there and find about 5 other stocks that have a similar pattern and
Yep.
do the same exact thing. So that way you're not betting just on one. You're buying 5 or 6. You have a better chance for one of these things to work out. And it could be OKTA that's been trading sideways. You have the TDOC. You have Team. Bunch of Team. It's
Right,
a
but
little
really
loose right
quick. So
now.
let's say hypothetically, and we're not, this isn't advice, this is just more of like hypothetical. Let's say you do buy this stock XYZ at 219 and your stock is 185. You know what a lot of people are going to do? If it starts to head down to 205, 202, they're going to get scared.
Well, right. That
They're
means
going to
that
sell it before the stop. So go ahead. How would you
that
deal
just
with that?
means that you haven't accepted the risk. You need to be able to accept the risk before you hit the buy button.
You say I'm willing to hold, that's my stop, but when it heads down, you actually aren't really willing to hold down that low.
Look, right. So the best thing you can do is very simply, you put a good till cancel physical stop, you take it off the screen. Don't even look at it.
And go for a walk
There's
for
no reason to
a
look
couple of
at it.
months. Yeah, go
Yeah.
for a walk.
No reason to look at it.
Start drinking, start smoking, doing anything. Just
Do
don't look at your
something else.
stock.
Right. So anytime you want to look at the phone to look at a quote, do some push-ups.
Yeah, that's what Sanlucci does. He does push-ups. He even live streams his push-ups. Team, yeah, Team's the same thing. I mean, it's a great company. It's got a really, this 160 level, it's bounced off of a couple of times. So you have, a nice consolidation here. I mean, yeah, there's a lot of software names to keep in mind. It made a big run, and it's just this one's actually putting in more than a, 3-month base. We're talking, I don't know, probably like 6-month base or longer here.
Yeah, from May to now, we're at 5 months.
Yeah, what bar is this here? Going back to this bar here. Yeah, May. Okay, yeah. So yeah, that's a weekly chart. Sorry. Yeah. So that's a good 5-month base here. Yeah.
Yeah, so in here, I'm noticing Frank stocks, OKTA, Avalar, LVGO are at moving average convergence. Right. Well, right. Convergence, or they're hugging. All that means is the stocks have done nothing for the last 3 to 5 months. That's all that means. When you have the 50-day, the 63-day, the 100-day pretty much together, it just means the stock has formed some type of base more than likely, or it's gone sideways, or there's been no price appreciation over the last 3 to 4 months.
And just remember, if you have the 20 days your stop and it doesn't work, you can use the 50 days your stop. Then you can use the 100 days your stop and the 150. You can just keep using whatever number. I'm being sarcastic. I'm trying to lighten this up. You definitely have to have a stop in there, but I like to use the moving average as our friend Brian Shannon says, more of a reference point. But those are good reference points for the stocks.
Right. So look, TDOC or SE next 5 years if you had to bet on one. That's not the way it works.
I'm not gonna answer that question.
That's not the way it
I have
works.
no idea. I have no idea. The average holding period is like literally like 7 hours. I mean, someone's asking me about 5 years. I have no idea. I honestly have no idea. I
Right.
don't know what's going to happen this week. How am I going to tell 5 years from now?
Bet on both. Buy both.
Buy the SPY. You're better off.
Anything else, Joe?
No. I mean, if you want to take over I feel like I've hogged this up with sharing my screen. I don't know if you want to look at something on what you're looking at. If you want
I
to
feel
pull
like
up
I'm
something
done.
you've been looking at, or
I feel like I'm done, Joe.
all right, I'm done too. Then that's good. It's about an hour. It's perfect.
Let's just, if you guys have any questions, we'll keep it open for the next 2 minutes. And then we're going to go.
I'll go back and share the screens if there's
Right.
any.
So
other...
you did some screening. Give us some stocks.
I thought I did.
Look, I jotted down. Here's what I jotted down. Just based on, I'm looking.
I got MRVL. I mentioned
Right.
Datadog. Already broke out. I mean, Fastly, Crowdstrike. I'm trying to think what else is on my list. ESTC. I mean, mostly software related. I will say this for people who want, I've noticed like Best Buy, Target, some of these other ones, L brands. It's nice to see stocks outside of tech, medical, software. Nice to see open up the economy stocks coming around, which could be the market's a discounting mechanism, anticipating some retail coming back to life. MasterCard is in a decent consolidation. So yeah, there's a lot of stocks. It's not just software. I want to try to give, some other stuff.
Yeah, I'm gonna give you guys some stocks that have been going sideways for a while.
I'll punch them in. Go ahead.
MDB.
MDB, also software. Great consolidation here.
Right. These are stocks that could potentially move higher, emerge from these bases, right? I mentioned AVLR, I think.
Yeah. If you notice, that's why we screen. A light bulb should go off. Software. That should just help you maybe gravitate towards software. Is such an amazing business because the profit margins is just so strong on software.
Deckers.
Yep.
Right, with the UGG boots that just had a recent, it just broke
just
out
came right out. Yep.
And there's some bottom feeders also that have been going sideways for a while. These are really at the bottom. Like Under Armour, way at the bottom of the floor, about bottom of the ocean.
Yeah, I mean, and there's different ways to play this. I mean, that might be more of a value play or a turnaround play, but just keep in mind that at least you have a defined area. I mean, it's been basing around $8 forever. Just keep in mind, this might not be a true breakout in the sense of it might just take more time for it to come back up because of overhead resistance. But yeah, there's a lot of different ways to play these things.
Dynatrace DT.
Yeah, I mean, that's going sideways, just like a lot of software names. That's going sideways as well. It's just like you mentioned with MDB, Okta, a lot of these 3, 4, 5 months of sideways action. Net is one that's approaching highs. It's a little bit looser of a base, but I'm just looking at some of the stuff. Shopify back through its 50-day. That's nice to see. I think it needs a little bit of time here, but you could say maybe this is sort of a double bottom. Again, I'm just connecting whatever dots I want to make it look like a double bottom. Either way, it's a consolidation. Stamp is back through its 50-day. And, this is where it broke out of a base, broke out. About 50% of stocks come back to retest that base. So it came back to retest. Now it's back to its 50-day. But again, I go through, for my educational members, I went through about 70 stocks that was just they're all set up or buying to prove the point that price action is more important than the news. And now more than ever, with so much toxic BS going on with politics, you got to shut that out. Yeah, you want to follow the news to see what's going on, but you got to shut that out and focus more on price action, because I'm more constructive than most because of what I'm seeing in stocks.
Right. What about Snow?
Snow needs time. Same thing. IPO base. It needs time. IPO'd at twice. It IPO'd at 120, opened at 240. I mean, you know, whatever it was, 100 times sales, which Zoom was like 50 times sales, and this was double Zoom. So Zoom, you know, price to sales was the highest one, and this is double Zoom price to sales, ballpark, give or take, whatever the numbers are. But you get my point. I mean, amazing growth story, great prospects, but you got to like let this thing calm down and form an IPO base. The problem is with some of these IPOs that are so hyped up by financial television and media, you got to calm down and just don't feel like you're missing out on anything. Give them time. There's no rush. Give them time to form IPO bases. So I have no interest in entering something like this until it consolidates.
Okay. I think we can wrap this up.
Okay. You got anything else or we're good?
We're good, Joe.
All right. I'm going to go back to trading Nikkei futures. Maybe some Bitcoin and, you know, see what's going on tonight.
All right. Thank you very much.
Thanks, Frank. Appreciate it. Guys and gals, thank you for all your awesome questions, for tuning in, and good luck trading this week.
All right. Be well.